Hello traders, Gary Wagner here. It is 12 noon in Honolulu, 5 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 21st day of February 2025, and this is the evening report for gold and silver, our weekend review. Today, gold declined by $6 per ounce, taking the most active April contract to $2,949.60. That being said, on a weekly basis, gold had a strong gain of $55.90. That's a net advance of 1.93%, marking the 8th consecutive week in which gold has had respectable gains. When we take a look at the recent net gain of gold on a daily basis, we can see that we've had extremely small body sizes, roughly $6 per day. The most noteworthy aspect of trading this week was yesterday's intraday high, taking gold to the highest value ever for April futures at $2,974 per ounce. Although we've seen gold remain near the upper register in terms of recent pricing, we can easily see when we look at the stochastic oscillator that since the middle of January, gold had moved into an overbought scenario, trading above 80 on our stochastic oscillators %K and %D. We've also seen a recent contraction of the Henkin-Ashi candles on a daily basis, with today's candle representing an extremely small bodied candle, potentially showing some sort of pivot or weakening of the overall momentum of this recent historic rally in gold. However, when we view gold through the eyes of a weekly Henkin-Ashi chart, we can see that yes, we have had contraction of body size, but we are still showing solid upside momentum. Also, when we look at our stochastic oscillator on our weekly chart, we can see that although gold has moved into an overbought scenario, compared to other rallies that we've seen throughout last year, such as here, as well as here, gold remained overbought for months at a time. However, what we are seeing as a difference between rallies that occurred last year compared to this current rally is the consecutive green candles, now the 8th week in a row. Historically speaking, there are only a couple examples that we can look at. The rally that occurred beginning in June of 2020 started off very slow. You can see we have very small body sizes in the candles and accelerated for 3 weeks, which took gold above $2,000 per ounce for the first time in history. The other example, we have to go back all the way to 2011 to the historical climb to $1,900 an ounce, the first time that we've ever seen gold trade with this many weeks of consecutive green candles, and this concluded the first occasion in which gold broke $1,900 per ounce. That being said, what is most unique about this current rally is in all likelihood, gold will continue to move higher and actually challenge $3,000 per ounce. And as I said once before, I don't believe it's whether or not gold will break $3,000 per ounce, but rather when it will break above $3,000 per ounce.
Silver sold off rather sharply today, losing 1.88% in trading, which is much greater than gold's losses. Today I wanted to cover the fact that while silver hasn't gained as much attention as gold has, it still is up dramatically for 2025, and its gains match those seen in gold. Although it is gold that has garnered much of the attention from investors this year, silver has actually done equally as well. If we look year to date, silver has actually gained more value on a percentage basis than gold. Another thing to keep in mind is that while gold is at record levels, silver has traded much higher than this before, so it is not hard to envision silver trading much higher than it is. Another thing that's evident in this longer term chart is that gold has done roughly twice the performance that silver has since 1999, and some may argue that silver is undervalued when compared to gold. However, when we zoom in closer, we can see why gold has gained much of the attention that silver has failed to garner. And that is its weekly candles are so exceedingly bullish, while silver has been in a rather consolatory state. If you look closely at our daily candlestick chart, you can see how we get alternating candle colors and haven't had any meaningful direction for the month of February. Right now, silver still has support at 32.66. It looks like we may be consolidating in this range for a longer period of time, but I still believe that when we finally break out of this range, we will see a rally in silver ensue.
This has been Gary Wagner,
And Joseph Wagner,
wishing you as always good trading.
we will talk to you next week on Monday for our next video report.